The First National Bank of Lindsay has reported they failed due to fraudulent activities, making the second U.S. bank collapse this year. On top of that, the CBO has just charged Morgan Stanley yet again for more bad bookkeeping, which most offenses took place between January and April of 2021. It took them this long to crack down on something like this. Moving on, Citron employee Ryan Choi was just sued by the SEC for securities fraud as well. Choi was the same one who assisted Andrew Left, who also shorted GameStop and posted bad tweets about GameStop, in drafting tweets for Citron Research. So he was committing securities fraud while also assisting with drafting tweets against GameStop. The SEC announced that Ryan Choi has agreed to pay over $1.8 million to settle charges for negligently defrauding Citron Research readers through tweets. Once again, this may be leaving more short sellers on the edge, but in my personal opinion, they need to up the fine, up the charges, put them in prison, right? Now, the S&P 500 continues to slip and fall today while the VIX is rising. We're going to talk a little bit about that later on in the video, but easing into the squeeze side of things, talking about GameStop and AMC, Larry Cheng hinted at GameStop receiving equity in his recent LinkedIn post, which we're about to take a look at. But if you haven't yet, make sure to like the video, drop a comment down below to engage the algorithm. Now, this is Larry Cheng's LinkedIn post giving his general guidance that he says is pretty simple. Try not doing much of anything different for 1 year, stick the money in your bank in some cash-like instrument, and forget about it for a year. You take a look at the whole LinkedIn post, you can kind of create a little bit of tinfoil hat, and we've seen that his recent posts have hinted at GameStop. Now, AMC also just announced that they're set to report Q3 earnings in after hours on Wednesday of November 6th, which brings us into the charts. AMC's trading at $4.22, down 2.88% on the day. Now, obviously, everything is down on the day, but we did not want to see another rejection at 435, and unfortunately we are seeing it. So where does this mean we are going to go from here? First of all, this is November 6th, so we don't have a lot of time, and we are in a point of interest for AMC. In other words, leading into this earnings, AMC is going to be extremely oversold, and then they are going to flush it, and you'll probably see lows that we have never seen on this stock below $1.99. That's, again, if we continue to reject off of 435, which is the worst case scenario as of right now, and that is what we're playing out. Otherwise, coming into earnings, you're likely to see AMC at around 520 to 540, and then break higher in this point of interest. Either way, you're seeing large moves, and they're going to be coming into earnings already giving direction, in my personal opinion, as of right now, based on the inverse pattern that we have been tracking. AMC is not looking very hot. So, zooming in, we are on the 4-hour time frame. What can we possibly see with AMC to actually hold up? Well, we'd like to see a bounce here at 420 to bring us back up to 435 and break us past that. Build this spring, get a lot more volume, get some sort of positive catalyst. If we don't see that, you're watching for a hold at $4 to probably $3.95, but testing a weak support a second time is never a good sign. That's not something that I want to see. I want to see AMC go up from here. As far as GameStop goes, we're trading at $20.46, down 2.25% on the day. And I'm not too sure why TradingView adjusted my flag pattern that I had drawn out on GameStop and made it look like it's much further than it actually is, because this is not how I had it drawn out. In fact, the pattern that I had, the flag that I had drawn out, was showing GameStop breaking under the flag, which was a bearish thing to see, which is not something that we want to see ultimately for GameStop. Bringing in the bars pattern, what does it look like is happening with GameStop? Well, there's no confirmation just yet, and there it goes. My TradingView just readjusted. I'm not sure what's happening here. There's no confirmation just yet, but you can see that everything has been playing out to a T, getting this channel trade, coming up here, scaling down, getting this little curl, and ultimately from here, GameStop still should see this move up. Now, what is not good is seeing this test out of the bottom of this flag. I'm just going to say that this is likely a fake out, because you saw the same thing back here before it got a nasty rip, and it's trying to, get people who recently load up on call options to let go of these, and I'm personally not going to let go of mine, and that's just the way I see it right now with GameStop. Overall, still very bullish, especially down here. I think this is a buying opportunity. Wolf, WULF, it got a retracement down 8% on the day. I'm still in these contracts, very risky, all right? I could have took a nice profit. Now trading very close to a support that I want to see it hold today. I want to see it close above $6 for some more continued momentum. Not to mention, there's a decrease in momentum in volume on this sell-off, which is a good thing to see. We want to see it increase on the way up. Very simply put. Last but not least, before we explain why the market's dropping, touch on some plays as well as Tesla before earnings comes out tonight. The FTC just passed a rule which prohibits fake online reviews. The rule was passed in August, but now it's coming into effect. It allows the agency to impose civil penalties on those who deliberately violate it. It's basically to protect consumers, warn businesses that manipulate the system, and promote fair and honest markets. The rule prohibits reviews and testimonials attributed to non-existent people, those without experience with the product or service, or those who misinterpret the experience. It also bans businesses from creating or selling reviews and penalizes those that knowingly purchase fake reviews, obtain them from company insiders, or disseminate fake reviews. So what does this have to do necessarily with AMC and GameStop? Well, overall, it's just a general rule of thumb, but we have seen how many news outlets have put out false reviews who have never even owned the stock or been in an AMC theater about the company, right? As well as GameStop. Now, the S&P 500 slips for a third straight day, according to Seeking Alpha. Now, why is this happening? Well, on Wednesday, the SPY fell for a third straight day, weighed down by consumer discretionary stocks and a post-earnings plunge in some high-profile companies. Meanwhile, a continued bond sell-off on bets that the Federal Reserve would not be as aggressive with rate cuts as previously expected also weighed on equities. So, most importantly, out of these things that are causing it to drop, it's corporate earnings, in my opinion. Some mixed corporate earnings report have added to the pressure for the dump. And you're seeing VIX up 8%, trading almost at $20. It's never good to see a VIX rise like this. This is growing uncertainty in the markets. As of right now, my original standpoint is I didn't think the SPY would be ready to tank. I wanted it to get up to around 596 to 604, and I still believe that to potentially be the case. This could just be the pre-election pullback that the SPY normally sees, and in my opinion, this could be a great buying opportunity for some medium-term call options as soon as the SPY gets in the territory that I want it to get in, which is this bottom trend line that we have at 574. At 574, I will be entering some medium-term call options. Nothing I say is financial advice. I'm not a financial advisor. And as always, if you want to know my trades as soon as I take them, so you can potentially follow me, all up to you. I can't tell you what to buy, hold, or sell. I drop those trades immediately in Discord. I have a link tree up, and this will take you right to the server. So if you're not in here, get in. I'm going to leave the link tree pinned in the top comment, so if you go to the comment section, you'll find that. Ultimately, yeah, guys, this range right here for the SPY, 575 to 573, is where I think we will get this first bounce. You can see we broke one trend line, broke a second trend line today, and now that third one I expect to potentially hold up. And if we don't hold up, you're looking at 565 for the next zone. Also, more things are falling alongside the SPY. Bitcoin broke below 66,500, which is not something that I want to see. We got a hard rejection at 69K once again, which was probably one of the worst case scenarios that we could possibly see for Bitcoin, because I did not want to see another hard rejection up there. We saw heavy momentum leading us up to that level, and then a smash down out of that. And Bitcoin could be potentially building, a nice tight head and shoulders pattern right here. If we get a bounce back up to 66,500 and can't hold, then get flushed back down all the way to about 63K, which is not something that I want to see. Ultimately, I'd like to see a bounce at 65,500 or 65K. I have this, what I would like to think is a demand zone drawn out between 64 and 65.5-ish or so. That's where I see Bitcoin hopefully holding up over the short term. Nvidia also getting a flush down today, breaking below support at 140. Nvidia could probably come down to 136.90 and then get a bounce. But to be safe, 135.27, or we flush all the way back down to 130, depending on how long the SPY ends up bleeding. Tesla down 2.3%, 212.93. Here's the thing, I'm in puts, I'm up profit. I will debate on closing those prior to close, but as of right now, I plan on holding. Seeing Tesla go into earnings, especially in a weak market, just makes me want to hold a little bit more. I'm watching for 204 after earnings. If not lower, honestly, you could come all the way down to this trend line depending on how bad they are at 190. But realistically, 204 tonight, hopefully, for Tesla for those playing puts. And if I get smoked, I get smoked. Last but not least, CDC links E. coli outbreak to McDonald's, and then McDonald's shares crashed 10%. That is actually disgusting. I don't even eat McDonald's, so I'm thankful. But yeah, that's disgusting. Overall, guys, that is what I got for you for today's video. Make sure to go the top link. It'll take you to my second channel. I haven't posted content yet because we have not gotten 100 subscribers yet. And I know you guys can easily get there. Once we get there, I'm dropping some videos. This is behind the scenes work, podcasts, vlogs, all that other stuff. Basically, just my life unscripted. So get over there, guys. Make sure to join the Discord. A lot of new people joining, and the benefits you get out of it are insane, especially for the price. It's extremely cheap. You won't notice it, guys. The second link in the description of the video is for Moomoo. It's a platform that is free like Webull or Robinhood, except they have a ton of tools that those platforms don't have and or charge for. So this is free. Just open an account with them through my link and deposit into your account and start trading. You're getting up to 15 free stocks after you do this, a $30 cash reward, and 8.1% APY on your uninvested cash, so do not sleep on that. It is the second link. It'll take you 2 minutes. Top link is for my custom indicator. It is pattern detection and forecasting. If you don't have it yet, go get it, guys. Plug it into your TradingView charts and assist yourself, level yourself up. That is it. I love you all. Lottery sucks out.